Another question that people are asking themselves is why not participate in the private markets? Like, why not invest in the startups at the earliest stages? And it is actually for these exact two reasons, where if you are a startup today and you have no proprietary data, we actually think you're already many, many years behind some of your public company counterparts that have built that proprietary data and have that moat in front of you. And it is very, very difficult to monetize any of the technology that you're building against this open source environment where so much of the technology is being given out really for free, that the fastest and the path to least resistance in terms of monetization also actually comes from existing distribution. So Microsoft can be selling the exact same tool that is available open source, but because they're selling it inside their existing ecosystem, they actually can charge something for it. And a startup that has the exact same technology or even superior technology without that existing distribution is going to have a hard time monetizing it. And so we actually think this is one of those technologies where being in the public markets is actually an advantage because the data and the distribution advantage is usually the deepest in those publicly listed, more mature companies. And this is not going to be one of those examples where the low-hanging fruit. Maybe there are some great opportunities in early stage venture capital, but the real low-hanging fruit we don't think is going to be in private companies. It's going to be in much more mature, larger organizations. And so where we want to see Plutus specializing is that if you think about the world of investors, most of the investors out there that deeply understand technology are earlier stage venture capital style investors, and they are actually structurally not set up to participate in public markets. Their legal and compliance regulations don't actually allow them to participate in the public markets. At the same time, the investment companies that are active in public markets, very, very few of them deeply understand technology. They're not testing this technology, playing with it. They're more traditional shops. And so we want to be one of the few teams out there. And really, there's not 1,000 companies, I think, like this. I think there's maybe a few hundred that sit at this intersection of being able to deeply understand the technology, but also be able to participate in public and private markets. And from day one, that was a decision that Richard and I made as we were starting the firm, is we wanted to be able to go across the asset classes, across the stages of investing, and find for that particular opportunity the best risk-adjusted return that we could find. And that's why we structured the company from day one to be able to do multi-stage, multi-asset type of investing. So we think we have a unique position here from the rest of the investment firms out there.
Just to add one other point there, the ability to change your mind on an investment is very, very important when looking at exponential technology and looking at an open source environment. We've learned on the blockchain side of things that you can have a competitor with a few $1,000s budget outcompete $100 million established player in a matter of months. And so being able to change your mind with a public portfolio is just very, very important, and we think adds alpha over time.
Yeah, very difficult to make a 10-year. We can barely predict the next 2 years of development, let alone invest in a private company and then watch it for 10 years and actually have conviction that they will be the winner at the end. And so it gives us a lot of, we think we can generate a lot more alpha by being able to dynamically shift the portfolio as the underlying technology, the adoption, the metrics of the businesses change.